Hello everyone. Joining us today is Dr. Marc Faber of Marc Faber Limited. He's also the editor and publisher of the Gloom Boom Doom Report. Dr. Faber, thanks for taking time out of your very busy schedule to talk with us. Let's start out with
My
China.
pleasure.
Mark, what is your outlook for China over the next several quarters? According to the Chinese government, the economy is growing there, yet they still needed stimulus packages and they have an unemployment problem. We know that bank lending has soared in recent months, yet much of that money has gone into their stock market. 6 to 12 months out, what might China's impact be on the U.S. and the rest of the world?
Well, basically, I don't believe that China is growing at 7.8% at the present time. I think over the last couple of years we had growth rates in the order of between 9% and 12%, and that following the economic meltdown in the world between September 2008 and March 2009, Chinese economic growth slowed down very considerably, especially due to the weakening export sector. So my guess, and nobody knows for sure, but my guess is that the economy, despite all the stimulus, is growing at between 0% and maybe 3.5%.
But what's your take on the bank lending that we've seen, the huge increases in the last couple months? And, the facts are that a lot of that has gone into the stock market. Do you think that Chinese economic growth could slow as we get to the end of this year and into next year?
Well, I think, as you correctly point out, the bank lending went mostly into further misallocation of resources. It created another bubble in the share market and probably led to further overconstruction in properties around the major cities. And so the big question is, when will the Chinese economy also implode? And I think that is still a shoe to drop for the global economy. Maybe it's going to happen in 2010, and maybe they can postpone it for another year or two and so forth. But I think whenever you have bubbles, and whereas we had a credit bubble in the US, in China we had an investment bubble with overcapacities arising in the export industries, in the property market. When you try to kind of support these bubbles with interventions through fiscal and monetary measures, you actually don't solve the problem, but you postpone it. And so my view would be that eventually also the Chinese economy will have a more serious setback than so far.
Okay, now let's move on and talk about Japan. What is your outlook for Japan as a nation and economy over the next 10 to 15 years? Might we see the birth of a new secular bull market in stocks? And if so, then what catalyst should investors look for?
Well, I think first of all, my views from the global economy and economies in the industrialized world, including Japan, is very different from my view about stock markets. My view is that the economy globally will remain weak. Maybe we have a period of recovery that lasts 6 to 9 months because of all the stimulus packages, and then the economies weaken again. But that asset markets in some cases, despite the weak economy, will go up for the simple reason that central banks will keep on printing money. And in the case of Japan, I would add that when the market bottomed out in March 2009, we were at the 30 years low, basically. We were at the same level than we were in 1981. So let's say if you took the S&P down to that level, we would be at 120. So we had in Japan a secular bear market. In other words, we peaked out in 89, And from 89 we went down, whereby we had several rallies of over 40% during that period of time. And finally we bottomed out in 2009. And in my view, this is a major low. March 2009, a secular low, the way we had secular lows in the U.S. in the 1940s in real terms, or in 1982, from where you had significant increases in share prices. So on any setback, I would consider essentially increasing my positions in Japan.
So relative to other stock markets around the world, is Japan one of your favorites in terms of risk-reward?
Well, I think in terms of big markets, the U.S., Western European markets, then Japan would attract my attention because I go to many different conferences around the world. And whereas in the late 80s everybody only spoke about Japan and how the Japanese economy would grow and how big the banks would become and how they would dominate the financial sector globally. Today, if you go to an investment seminar, there are more participants at the session about Cambodia, Myanmar, Laos, Mongolia than at the sessions about Japan. So I think that as a contrarian, this would attract my attention to it.
Now, you actually, I think, may have partially answered my next question, which I want to know, what emerging economies do you favor in terms of speculation? In other words, everybody's hearing about the BRIC countries. Can you mention some other smaller countries that long-term speculators should keep an eye on?
Well, I mean, depends a little bit how you define emerging economies. I think here in Asia, I still like, essentially, from a longer-term perspective, Singapore, whereby it's an advanced economy today, and I still like Thailand for the simple reason that valuations in Thailand, and I'm not saying that the country doesn't have some problems, but the valuations are relatively low, and the dividend yields in both Singapore and in Thailand are relatively high. So at least you get paid to wait.
Now, let's move on and talk about gold and inflation. And first on inflation, Mark, can you educate us as to why when inflation returns in the USA, why it's likely to be much higher than the consensus and very difficult to control?